My name is Piers Mushiri from Centum Investment. Congratulations for the very impressive results. Mine, I think you've already answered sort of 50% the question that I had in mind, but I'll just ask the question because I think I need some more explanation. KenolKobil has the highest turnover in the Nairobi Stock Exchange, and I think the way it is losing out in terms of not being the most profitable company is basically in terms of margins. We've grown from about 1.3%. Now we are about 2.6% PAT margin. I know there could be an inherent issue because of the business we are in, downstream oil business. But the question in my mind is just how much farther can we push on this margin? From your presentation, I missed out on the country contribution in terms of PAT. It was a long presentation. Maybe I missed out, but I would really like if you can highlight how it's looking like and how it's been changing, and what are the areas, which are the countries that you're emphasizing. Again, I think in respect to emphasis on margins. My third question is more in terms of industry. I think I've come to your offices and we've spoken about this, the inefficiencies that are in the petroleum industry, in domestic sense. How is that coming up, and what's the outlook?
Yeah, talking of margins in percentage of the turnover, it's a fact. It's an industry. A typical level of margins in percentage-wise, it is very low. In turnover, it's very high. Had we, for instance, removed, and I've done this exercise for some of the investors in Europe, had we removed the trading business activities out of the overall activities, you would have seen the margins in percentage going to about 6 or so %. Okay, even in those years, even more in those years you were referring to. The reason it came down is because when we ventured into the African trading desk, and you can see this contribution in terms of absolute numbers, leave percentage. As you as investor, you should look at the bottom line in absolute numbers contribution. So the contribution of this African trading desk is not that small at all. Yes, in US dollar terms. So when we ventured into that business, I think maybe Steve, you can help me, 2000 or 2001. 2001, we knew very well that it will boost the turnover substantially, okay? Let alone the fact that cost of goods goes up in this environment, and you know what has been going on, and so on, with oil prices internationally. But we know very well that when the moment we introduced it, the turnover will shoot up, and we know the name of the game of this business is a low margin per unit but high volumes, okay? And there is no risk. You have to understand how it works. You bring a cargo from the AG, it's already pre-sold. You know who is the buyer, at what price, what is the price formula, and it's back to back, and there is no much of risk here. You get me? So that's why it is still attractive. And the other reason why we wanted to venture into the midstream and the African trading desk is because we knew that at the end of the day, it will reduce our overall cost per unit. You get what I mean? Okay. So in terms of percentage, it will go up, but don't expect it to go up as much because of the African trading desk. Okay? And that's why, by the way, one of the reasons we decided to bring more the business lines to show the people what it means. If I take off this one, believe me, the margins will jump per unit. And if I go into certain business lines, say lubricants, gas, LPG, the percentage will be completely different, by far completely different. So rest assured, I think it's the best strategy to operate and continue being active in this business focusing on it because we believe we can do so. And if we develop higher total group storage facilities, we'll be more active in this trading and it will grow. I tell you, this is one of the business lines we intend to develop more in future. Now, on the country's contribution, I already mentioned and I referred to when Susan asked me that question, but there is no doubt that the geographical expansion has helped the group very much, very much. And I can tell you, of course, there are different margins in different countries. And if you want, I can go country by country and explain to you. For instance, Uganda is a very tough market today. For reasons, by the way, Uganda reminds me, and I've been here, 21 years. I'm a Kenyan, and I know Uganda reminds me Kenya post-October 94. You recall when the market was deregulated with all these small outlets, a pump, and the nozzle coming out of the window, selling fuel from the house to the... It's the same like now in Uganda. There are so many players, but we know very well things will change. And we are a long-term players. In this business, you cannot be a short-term player. In this business, you have to think about what's going to be in future and ride on it and develop the right strategies. So Uganda is a difficult market in terms of margins, though already we have some interesting indications that the market is changing. Why do you think we managed to buy Phoenix? Ask Kondo, he's the one who has been behind it. Why do you think? Because it's becoming difficult for everyone. So who is the one to give up quickly? The weak, not the integrated ones, the ones who focus only on one business line. So we buy them. And I can tell you there will be more acquisitions in the Ugandan, and we believe in the Ugandan market a lot. So I gave it as an example. You go to other markets, I can tell you Zambia is a very good margin market, a very strong. Very strong. I don't want to go into explanation why, and it's been there, and we are so happy about the investment there. And without Zambia, you wouldn't have seen these kind of numbers. Without Tanzania, without Rwanda, Burundi, which is coming on board recently, this is the first full year, half year which we have seen Burundi. So, I mean, you have to look at the overall picture and get the feel of the geographical expansion contribution, and it's a very big, and it is growing, and we all know one thing, and we talked about it yesterday at the board meeting. This business is full of cycles. You have cycles where in this market you do more, tomorrow you do less, and the other market becomes more attractive and so on, for many reasons. It can be political, it can be economic cycle, it can be so many other issues, and we are quite happy about being in so many countries, spreading the risk and managing the opportunities across the region. And we intend to have more on board, more countries on board, because we know as many as you have, as long as you can manage it, and manage it carefully, smartly, creatively, you will have a better future in the business. And that's what your company is doing. I know you are as well an investor in KenolKobil. So I hope I answered the question. And there is one thing, the last question was about Kenya, whether it's still going on and so on. We have a Kenyan management here. And I would, if you don't mind, I will give the opportunity. David, you want to take it? And I want David, as you know, David is the KenolKobil Kenya General Manager. He will respond to it.
We don't see any improvement going forward with the infrastructure here in Kenya. One is KPRL, getting worse, and the pipeline. But as you see, the slide was talking about our stock position. It's not a short one. And again, I don't want to go into the details. There is too much media and probably some competitors here. So, no, but really, we don't want to go into the details. But we have our ways in Kenya how to survive in this tough market. And I think we are surviving.
guys, take note of what he's trying to say. David is trying to choose his words, and I do understand the fact that there is media here. We don't want to divert the attention from these great results to, again, issues between oil industry, KenolKobil, and other players, and ministry, and KPC, and KPRL. We don't want it to become like that, okay? So that's why he's choosing his words. And that's, by the way, the reason I pushed the answer to him, just to tell you. But look at what he's saying, and listen to what he's saying. We have our own ways of managing the situation. And Kenya has been doing well in KenolKobil Group. Unlike maybe other players, I don't want to refer, but there is another, at least one more public company there, so you just have to wait and see the results, or just go to the first quarter results and then you'll see. So what I'm trying to tell you, we are trying to be, and this team sitting in front here is trying to be very creative, very innovative. Look at what they've done with this campaign, this deal pour, and the special deal pour of Sunday. Show me any other company that can do so for so long time. It's been 5 months. I know that David and his team are planning to continue. Show me many other companies, not many, show me another company that can do so and extend the benefit of the overall group performance to the people of Kenya and attract the people of Kenya with this kind of oil prices. And believe me, it's a very difficult to do what they are doing because we are actually giving up our margin. Yes, to certain extent up to 5 shillings per liter in Sundays, if I'm not mistaken, Sundays, okay? And so it's all to pass the message that we are still a Kenyan company, and I talk to the media here, we are still a Kenyan company promoting the Kenyan name across Africa, okay? I don't see many Kenyan companies in this market that have expanded so much like KenolKobil and started this expansion when no one was talking about expansion and moving out of the borders of Kenya. Started it in 1999. So we want, I'm not seeking sympathy from the people of Kenya, but I'm seeking some understanding because we went through issues in Kenya. David didn't want to talk about it, and with KPRL, with KPC, and so on. But that was all about protecting the interests of your shares. Remind you, you are shareholders, and what we have been doing there is to protect our interest in, or to protect the interest of the company and protect the interests of the shareholders. Thank you.